Most people want to be financially successful, but few actually build the habits that lead there. We're talking about saving, investing, and building wealth. But at the end of the month, many people still ask, where did all my money go? The truth is, financial success isn't about luck, timing, or really even how much you make. It's about the habits you build and which ones you stick to over time, because habits create consistency and consistency creates wealth. So today I'm breaking down 3 very simple financial habits that will help you take control of your money, reduce stress, and finally start building the financial life that you want. Let's go.
Welcome to the Financial Mirror. Where future success is reflected in our knowledge of fixing the one thing we can control, ourselves.
Welcome to the Financial Mirror, and thanks for joining me today as we continue to work to improve the one thing that we can control, ourselves. Here at the Financial Mirror, it is not about the numbers and spreadsheets alone, but about transforming and educating you on money so that you can make smart financial decisions. If this is the first time you're joining in, don't forget to hit subscribe on YouTube to be notified of all the new episodes as they release. If you're watching on Rumble, don't forget to like the video and follow the channel. And on any podcast platform of your choice, don't forget to like and subscribe to the podcast. So before we jump in, remember, I've talked about this in previous episodes, but I'm going to start off and lead off with this once again. Money isn't just about math. It's about a mindset. And you don't need to be perfect to be successful. You just need a plan and a few consistent habits that work for you and your lifestyle, and you will be financially successful. So as we go through these habits that I'm going to run through today, I want you to think about which ones that you can start improving today. And I'm using the word improving because some of these, maybe you're doing it, but you're not intentional about it. Maybe you're doing it, but you're only sometimes doing it. The key is that we're starting to build a few consistent habits that'll work for you so that you can start to build wealth. Okay. So we're going to go through 3 super simple habits to think about, and I want you to see which ones that you can start applying today. By the end of your journey, though, the goal is to be doing all 3 of these. And if you consistently do all 3 of these, you will be financially successful. So let's dive into the very first one. The first habit that you need to be focused on is budgeting with a purpose. And that's really like foundational. Foundational to financial success is a budget. And when I talk about budgeting, I talk about it as the enablement of you to spend money. It's not this thing that is simply something that prevents you or inhibits you from enjoying life like most people believe it is, but instead it actually enables you to spend money. You just get to spend money where you designate. That's really the idea behind the budget. And I use the term at the end of that, with a purpose, budgeting with a purpose, because a lot of people overcomplicate budgeting. They treat it like this big, great financial project that needs hours and hours of work every single week, but that's really not it at all. Budgeting is simply just categorizing your money and telling it where to go and updating it throughout the month so that you don't overspend in certain categories, right? And if you do, that's okay. Like, life goes on. You just have to take from some other category, right? That's it. It's not punishment. It's just a plan. But you've got a budget with a purpose. You've got to make sure that you have a plan that takes your income, plans out the expense part, and make sure at the end of the month that doesn't turn out to be negative. Be purposeful about it and put effort into it. Because you have to think of it like this. If you don't tell your money exactly where it needs to go each month, it's going to decide for you. And trust me, if you leave money unsupervised, it will disappear. And you will wonder and ask yourself, where did all my money go? Now, there are a few budgeting methods out there. And the good news is they all work, right? The key here is finding which one works for you. Which one, what I like to tell people is like, which one kind of just clicks. Like, it's like, it happens and you're like, yep, that's the one. I'm sticking to that because that just works for me. I don't care which one you choose. But I will tell you a few of them. And this is not a deep dive of those. This episode is all about these 3 habits. But I'm going to give you the names of them, and feel free, go Google them a lot. Actually, almost all of these I've done some episode on in the past. So just be aware of that. But one of the most common ones that I recommend like a lot of people to start with, because it's pretty easy, is the 50-30-20 budget, right? Simple as can be. 50% of your income goes to needs, housing, food, utilities, things like that. Like if you need it to live, it's a part of that 50%. 30% goes to wants, meaning those are the things that make life enjoyable. And 20% goes to saving, investing, and debt repayment. Okay. If you're in debt, I tend to have people drop that 30%, those wants, the fun stuff. Tell them to drop that down, and maybe you only do 10% and you do 40% toward debt, right? So you can get out of debt fast. But if you like that, that's super simple. Like if a transaction comes in, you're like, what categories does this go in? Well, is it a need, a want, or is it saving, investing, or debt? Like super easy. You have three categories realistically. So very simple, but it allows you to not overspend, right? Because the 50, 30, and 20 equals 100% of your income, right? So super simple. If you like a little more structure, you can try zero-based budgeting, where every dollar is assigned a specific category or purpose. And then you just do income minus expenses, and that should equal zero. Hence the name zero-based budgeting. It forces you to be intentional with every single dollar, right? It is a great budgeting method. I'll tell you this. It's the one that I personally use. I'm a little bit of a stickler, right? I like extra categories. I like to be able to look at my budget and say, like, how much did I spend on fast food? How much did I spend at coffee shops? Like, how much did I spend at groceries? For someone else, they would have taken all that and said, how much did I spend on food and drinks, right? Food and drinks. And I'm going to put bars in there. I'm going to put coffee. I'm going to put groceries. I'm going to put restaurants. I want to know individually how much did I spend in each of these, right? So really depends on the person, but even with zero-based budgeting, you can do zero-based budgeting at more macro categories like food, utilities, gas, or you can just call it auto and then wrap your car insurance in there, right? Like all up to you, completely customizable categories. That's another one that you can use. And then there's also the pay yourself first budget, where the first thing you do each month is move money into savings or investments, and then you just live off the rest. I'm not as big of a fan of it because what people tend to think of that as is like, oh, I just pay myself first and then I just live. And I think you kind of lose it. It's got a good heart, but how people apply it to their lives is sometimes a little uneasy, right? Because they're just like, oh, I'll just take the extra $4,000 and live on it, right? And then they get it in the month and say, well, where'd the $4,000 go? So I'm telling you, you still need to be intentional about where the money goes. You know what you have left over from paying yourself, and then you need to just categorize and make sure you're not going over. Track yourself throughout the month. But just a few out there. The key with all of this is whatever system you use, please keep it simple. Don't overcomplicate it. Track your spending, categorize your transactions, and look at it and update it regularly. That's how you budget with a purpose. It doesn't take hours. Maybe 10 minutes a week to just look at the transactions, categorize them, and you're done. But those 10 minutes will change your financial life. I guarantee it. If you're not budgeting, those 10 minutes will change your financial life. I guarantee it. Because when you know when your money's going, you're in control and not your impulses. So that's number one. Number one, budget with a purpose. Number two is pay yourself first, but only after paying others. So habit number two is pay yourself first, but only after paying others. Now, what do I mean by that? You've probably heard that saying, pay yourself first. I just said it even in the pay yourself first budgeting, right? And it's great advice. It really is great advice. But here's the truth. You should pay yourself first, but only after paying off your debts, right? If you owe someone, meaning a creditor or whomever, the money that you're making is not all yours. You need to get where all the money that you make is yours to do whatever you want with. 100% of your income is able to be allocated to things you want to spend the money on. not to debt. Okay. So you need to get out of debt plan, and you need to start that now, right? Not just good intentions to say like, oh, I'll get out of debt kind of as I do it. And every once in a while I'll throw a little extra money at my debt. Like, no, be intentional about getting out of debt. And how can you do that? The debt snowball. I've done many episodes, but the debt snowball is the greatest way to get out of debt. You just list all of your debts from smallest to largest, regardless of the interest rate, pay the minimums on everything except for that smallest one. And then you just attack the smallest debt that you have with every extra dollar that you can. When that's paid off, you take all the money you were putting towards your smallest one and now roll it into the next smallest one. And you just keep doing that over and over and over again. And when you're debt free, yes, please start paying yourself first, right? Pay yourself first. Get out of debt and then start paying yourself first. And that's where I like to tell you, you need to begin saving or investing at least 15% of your income for your future. And that's what habit number 2 is really all about. Pay yourself first. So pay yourself at least 15% of your income for your future, unless you're in debt, right? If you're in debt, focus on the debt snowball, get out of debt, and then come back to this. Both parties apply to habit 2. You have work that needs to be done in habit 2. You just need to be intentional about setting up your future. Getting out of debt sets up your future. 15% of your income sets up your future. If you're paying off debt, yes, whatever you are paying off your debt with, just roll that right into investing as soon as you're done. You should be putting in more than 15% towards your debt. You probably are putting in more than 15% towards your debt. Now, where does the 15% go? There are tons of options out there, and I would tell you that whatever fits your current financial situation and where you're at in your financial journey. Now, there's a mix of accounts out there. Savings accounts. People like to use those high yield savings accounts for emergency funds. People use brokerage accounts as bridge accounts or for long-term investing or flexibility. People use 401ks, 403bs, all those type of employer type of accounts, normally involving like a match or something. People do those for retirement planning. People use IRAs, whether traditional or Roth, all of that for retirement growth. There's all these accounts out there. What I'm telling you is put 15% of your income into a mix of them, maybe just one type of them. Each has its benefits, tax advantages, growth, potential, liquidity even. And which ones you use depends on where you are in your financial journey, right? But if you're saving and investing 15% in some combination of those, right? Savings account, brokerage account, 401k, 403b, or IRA, you're winning with money. If you're saving 15% in some combination of those, you're winning with money, right? Now, and I'm telling you, depending on where you're at financially, there is a healthier mix of which one you should be putting that 15% in, right? There is a healthy mix for how that looks. But what I'm telling you is just put aside 15% for your future. As you kind of grow and progress and build and develop in your financial journey, you can always kind of adjust, right? You can. Maybe you shoved it all into a high yield savings account and you get a little further down the road and you're like, man, I have a lot of money in a savings account and it's not growing very fast. So you take a big chunk of it and throw it in the market, right? You can always adjust a little bit. IRA, 401k, 403b, a little different, right? So please consult with a financial advisor or financial coach, somebody that they can help you kind of understand those situations. But even for some of it, even tax professionals will need to be, consulted to make sure that you're not messing yourself up and getting nailed with a tax bill. So, but save and invest 15% and you are winning with money. Okay. And the last habit, you need to set clear, measurable financial goals, right? Set clear, measurable financial goals. Your goals don't need to be complicated. They really don't. They need to be clear. Not complicated, just clear. Without goals, money has no direction. You don't know what your next step is. You don't know if you're on track because you don't know where you're going, right? You end up reacting instead of planning. And it's very important. So let's talk some good beginner financial goals. I wanted to lay out a few goals so you can just hear them. Maybe one resonates with you a little better than the other. Maybe none of them are good for you. but at least maybe they stimulate a thought that you can start to think through. What are my financial goals? Like, what should they be, right? But these are some that can really help build momentum and confidence. So goal number 1, build an emergency fund. You need to start with $1,000 just for the beginning. So maybe your goal is like, hey, I'm going to build my $1,000 emergency fund, and I'm going to do it in the next 3 to 6 months, right? That says in 3 to 6 months, I'm going to have $1,000 in a savings account ready to go for my emergency fund, right? Puts a timeline on it, it's specific, it's measurable. Like it's very, very, very tangible to know, like, I'm done with this and here's the timeline I'm going to do it in, right? So it's pretty straightforward. Goal number 2, I'm going to pay off my high interest debt in the next 6 months, right? This could mean credit cards, personal loans, all of that. But it says I'm going to pay off my high interest debt in the next 6 months. Very, very, very deliberate. Goal number 3, I'm going to save for that big purchase. Let's call it a house down payment, right? I'm going to save for my house down payment over the next 2 years, right? And you need to know what that down payment needs to be. I'm going to save $60,000 for my house down payment over the next 2 years, right? It gives you a target, right? 60,000, gives you a timeline, 2 years, very specific. If you're not on track, like, you're falling behind, right? Very specific. I'm going to start investing consistently $50 a month for the next year. That just says I'm going to invest $50 a month for the next year. Maybe I revisit that goal at the end of this year and say, you know what, that was easy. I'm going to bump it up to 200 and then do that for a year. But it sets a goal and then you can grow from that, right? These are just examples, but maybe the last one is, I'm gonna write my will to make sure that I have everything covered if something bad happened to me, right? That's not a direct financial goal, but man, it can just, help prevent a financial burden if something happened to you, right? It's got your will all set up. You're ready to go, right? Like, it's a financial goal, but it is something that most people miss. So I'm telling you, they don't have to be complicated. They don't have to be complex. All these were like super simple goals. Like, one of them was around saving. One of them was around paying off debt. One of them was around saving up for a down payment. One of them was around investing. One of them was around just making positive financial steps, right? All of those things are great. They're practical, they're achievable, and they kind of build on each other. Each of those do, right? So, but you need to write them down. You need to review them. You need to celebrate small wins along the way. And you will realize that financial progress isn't about perfection. It's about direction. You'll know where you're headed, how long you need to get to the next step. And then when you get there, evaluate your new situation and determine what that next goal is. You don't have to do a 5-year plan. Just do one goal at a time. Plan your what is that next goal? If you can work on 2 or 3 goals at the same time, do it. Do it. Just don't overcomplicate it. Make sure it's measurable. Make sure that it's specific. Make sure that you add a timeline to it. Okay. So that's your roadmap to financial success. Budget with a purpose. Keep it simple. Stay consistent and make your money work for you. Pay yourself first, but only after paying others. Use that debt snowball to get out of debt if you have debt. Then save or invest at least 15% across that blend of accounts. And then that third one, set clear financial goals. Start small, stay focused, and track those wins. And if you start doing these things consistently, you will be amazed how quickly your financial confidence and your wealth will start to grow. I guarantee it. So remember, financial success isn't about being perfect. It's about being intentional. And if you'll do those 3 super simple habits, you will be on track to financial success. They will absolutely transform your finances and put you in the mindset to where you can start to adapt with finances. And I think that's where people kind of hit that next level of financial maturity, is when they're thinking outside the box of like the everything is like a big decision. Everything's a big thing they need to do. They can start focus on like fine-tuned details, right? They still are getting better. They're still learning, but it's not about like starting to invest. It's about, okay, I'm doing like like 10% into a 401k and I'm doing 5% into a savings account. Let me start to blend some of these. I'm getting a little bit better growth over here. So let me start to fine tune and move, 7% over here and 3 over here and then 2 over here and 3 over there, right? Like you start to really break these things out and you can fine tune it and start to just be a little more efficient with it, right? It's not changing the concept. Big picture, you're still investing 15%. But it just starts to allow you to be a little bit more intentional on the details and build on those, right? As you just gain that financial maturity. So the 3 habits, they sound simple, but like I said, when you practice them consistently, they will transform not only your finances, but your mindset around money. So hopefully this episode helped you. Don't forget to like, subscribe, and share this with someone who's ready to grow in their financial journey with you. But look forward to hearing about it. Drop a comment below. Like, what is that next financial habit that you're focusing on this month? Like, what really hit you to say, you know what, that's what I'm going to start on first. Maybe I'm not going to do all 3 habits at once, but I'm going to start on this one first. What is that? Curious. Drop a comment below. But till next week, hopefully, you continue to adopt these habits, get at least one of these applied to your life immediately, and then start working on the other 2 as we go. But hopefully you got something out of this episode. And till next week, continue improving the one thing you can control, yourself. Peace.
Well, that wraps up today's Financial Mirror. Join us next week as we continue to work on ourselves, change our mentality, and to commit to achieving the success we always envisioned. Regardless of your platform, help us grow as a community. Please like, subscribe, and share with the people in your lives.